This is the Retirement Solution Podcast with financial advisor Jon Hicks, founder of J. Hagan Capital.
Glad to have you here with us on the Retirement Solution with financial advisor Jon Hicks. And when it comes to the many questions that so many of us have regarding the money that we have worked to get to this point, saving, investing, taking care of, now we want to make sure that it's going to take care of us in our older years, our second phase of our financial life, thinking about our retirement goals. Visit us at retirementsolutionsshow.com. Jon and his team at J. Hagan Capital ready to help you get answers to the many questions you likely have. We also have links posted in the show notes, or again, it's retirementsolutionsshow.com. 'Tis the season for spending all of your money.
Isn't it the case? What is it? Is it true consumerism because of America? Because I was thinking, recently had the opportunity to go do some business in London. And of course, that's where Charles Dickens, wrote The Christmas Story. And I actually got to see. I was in a museum and got to see the actual writing desk.
That's
where
cool.
He penned. Yeah, it was awesome. Where he penned The Christmas Carol. I started thinking, you know what? Scrooge finally figured it out. On Christmas Day after he'd gone through his entire soliloquy of event. Yes. We realized that he basically said, reached his house, say, what day is today? And he basically just spend with frivolity. Yep. He gave all this money away. And so the thing of it is, I don't think consumerism is uniquely American.
It's not new either.
It's obviously been around for quite some time. But as we get older, I think that the only thing that we're going to want to see more than a whole bunch of dead presidents in our bank account is our kids and grandkids, right? That is the thing that we want to see the face of the most. And outside of that, I think most of us, but not the most, not that we're greed oriented, but we would like a whole bunch of Benjamin Franklins around.
Yeah.
If that's a moment or a minute that our kids and grandkids and friends and family and loved ones and church acquaintances aren't around.
Yeah.
So we just want to find a way to make sure. How can we do that?
That's right.
It's not as hard as people think, but it actually does require planning. You can't screw around.
It's not hard if you take the proper steps, if you prepare yourself and educate yourself and put some, it doesn't even take a ton of work either. I mean, you help people every single day in the office creating these plans. It's not like it's a ton of work required. It's just a little bit of effort to make
and
sure
a whole bunch of planning.
Okay. Yes.
Yeah. It comes down to a lot of things, right? But, you've heard me say this on the show, and we were just talking, off mic, and I was just saying, at the end of the day, anyone can do whatever it is they want to do. Most people procrastinate and wait, and it's like, oh, well, it's getting close to Thanksgiving. Oh, well, it's getting close to Easter. Oh, well, it's getting close to whatever. It's just a way for them to do what they've always done. And if you always do what you've always done, you'll always have what you've always had. The most amazing thing when you look at people that have breakthroughs, true breakthroughs, not financially necessarily, not in their career necessarily, maybe it's spiritually. Yeah. Maybe it's just that epiphany the very first time that their first baby was born. And they were just like, oh my gosh, I'm a mother. Or I'm a father, or I'm a grandparent, right? Just they're milliseconds, microseconds that change and reshape the entire way we feel, right? Or the way that we perceive things, or the way that we work. So one of the things about having a financial plan, and we talk about it so much, to me, it almost gets like muddied down. It almost gets, or watered down. We say it every single week, and we've nearly done this for 13 years. I've said consistently on the show, hey, you just need a plan. Plan. Most people hear this, like, I know I need a plan. I've got a plan. It's called a statement. I get it every month, from 401k. Right. And we almost go past it, and we almost just water it down too much. The craziest thing is people don't believe me if they've heard me for the first time when I tell you, and this is a very honest statement.
Okay.
Nearly anyone, not every, but nearly anyone I have met can accomplish whatever it is financially they want to accomplish in retirement within reason if they just understand all of the options they have to create the plan. It's literally that simple.
Okay.
It's literally that simple. It is not more complicated. If you go to Vanguard, guess what you're going to own? Vanguard. You go to Fidelity, guess what you're going to own? Fidelity. You go to Schwab, guess what you're going to own? Probably Schwab. You go to the bank, But when you think about those things, those are just things. You're just putting your money in things. Where's the plan?
Right.
How do you know how much protection that you can withstand if the markets get weird? Trump being a bit of a I don't know. I'm going to say a nationalist. I mean, when you look historically, he's a bit of a nationalist. It's America first type policy. That's not always a good thing. It's not always a bad thing, but it will make other people decide that are they going to raise up their fur on their backs like a pack of wolves or not, right? And if that causes an issue, the U.S. could have maybe some economic issues. So the question, and where I'm going up with all this stuff, is what kind of plan do we have for protection and income?
Yeah.
If we know that we can't lose all our money because we have whatever form of protection we want, hedges, derivatives, downside protections, guaranteed money, safe money, guaranteed income streams, pensions, annuities, I don't care what it is, it makes no difference. But if we know that's there and we can't lose it all, then the very next thing is, will it provide enough income for us to do what we want? Think about it, guys. I have synthesized the entire concept of retirement planning down in two simple things. How much protection you currently have and how much income can it create? If you don't like one of those two, you can fix them. It's not complicated. The question is, how are you going to do it? Because there are hundreds of thousands of, there are myriad ways to fix it.
I think that the question
what
is
you're comfortable with.
But I think the question is, have you thought about what protection and income that you have? I have to imagine, and you're the one sitting there at the table, these people, how many people you meet with at the very first meeting know those things?
Less than 10%. Less than 10%. Most people, they require that Scrooge moment. They require that Charles Dickens. They have to almost have a life event or a whatever, or they just lost a fortune in the market. No different than in Scrooge realizing that he potentially would lose his soul if he didn't make some different decisions, right? As we're getting into this holiday-ish type season. But the thing of it is that these really great stories that seem to transcend all periods of time, they're rooted in something very important. And it was just having a little bit of different thought, right? Just a little bit of, did he have tons of money? Sure. But he didn't have happiness. He didn't have joy. He didn't have anything that money affords us. Ladies and gentlemen, if there's anything in this world that money affords us, it's time. That is it. It is time. Money should afford us time and the ability to help if we want. He really can't do much else. He could not cure a pancreatic cancer for Steve Jobs. It can't make you last forever. Most people that I know would never want to last forever, but it can change lives with the time it can purchase. The greatest resource, and every single one of us have the exact same amount as long as we're standing upright on this planet. The very same thing that all of us have is time. That's what money can do. It can afford us the time. So when you're thinking about that time, what do you want to do? Because it simply requires thought, and often it requires someone to help you back and forth, right?
Yeah.
We don't typically just sit in there in a room staring at 2 blank walls or 4 blank walls, if you can look out of all sides of your head, and say, I know exactly what I'm going to do and I want exactly how to figure it out. Usually it requires a little bit of prompting. That's where a good financial advisor, whether you already have one or you think you need one or you think you don't need one, that's where the good ones will actually stand out. They help you think about things a little bit differently and figure out not why you've done what you've done. It's, hey, are you where you want to be?
Yeah.
And if not, how do you want it to look that way? What are the things that you would want to do to change? Right? And so whether you want your retirement to last for 10 years or 50, typically what I have found, and coming back to my original point, most people who just think about it and get a little bit of direction, just a little bit of guidance, most everyone I've found can kind of accomplish what they want to accomplish. They just need a little bit of direction.
Let's talk about the idea of income and understanding, having that awareness of what we can spend. Again, we were talking about, started off this conversation, the spending time of year. So a lot of people have spending on the brain, particularly if you're in your retirement and you are spending that money that you earned and saved. That 4% rule that has been hanging around for the past 30 years. You can withdraw 4% of your savings each year in retirement. But new research, Jon, by the American Council of Life Insurers was giving the rule a stress test. And it actually ended up finding that it failed for older ages, resulting in the lowest income over time. So let's talk about what that means and then ways to add protection around our income sources.
Yeah, I was reading this. I was reading this article, and I don't know if I like the way they phrased it. Okay. So basically, they said the 4% rule failed for people in their older ages. Here's what I think they're trying to say. It produced the least amount of income as we age. Now, think about it, guys. Now, if we want to give while we're living, if we want to do a lot for our families and and gift and things like that, or frankly, we want to front load retirement. So we want to go on the big cruises. We want to go and travel much more. We want to buy that Winnebago or that RV, and we want to travel the world. Then there's a great chance we won't need as much income when we get a little bit older. At that point in time, we're probably not going to be climbing the steps of Machu Picchu or trying to go see the Hanging Tower or the Hanging Gardens of Babylon.
Yeah.
Probably not. Yeah. We might just be really happy if we can get all the family over to see us for the holidays, or we can go to Branson, Missouri to hang out with our group of friends that we went to college with. That's probably not going to require the same income. So it's interesting that they said failure. Here's where I think that the 4% rule is a little lost.
Okay.
Unfortunately, this was done, and they created this over 30 years ago when you couldn't hedge. We didn't have machine learning. We didn't have the ability, and certainly we didn't have the opportunity to protect assets the way we currently do now. So here's my question anytime someone tells me, because believe me, every single week someone says, well, John, I do the 4% rule. And that's great. If that's all you want, then that's fine. And invariably, they say, what do you mean? What do you mean if that's all I want? Well, I have clients that get 8% tax-free, and we do not expect to erode principal over the course of their lifetime. Period. Think about that for a minute. So would you want 4% on what you've ever saved, or would you rather have 5.5% or 6% or 7%, or in that exact situation that we just built for a client last week, where he is truly going to receive 8% tax-free income for the remainder of his life based on the amount of money that he puts in this type of strategy. Now, do you put all your money in that? No, you don't have to.
Yeah.
But if you chose to, would it be acceptable? It depends. It depends on what kind of situation you're in, what you're looking to accomplish, and if you want growth outside of that or not. All of those are questions, right? But if you have principal protection and you spent that, the question is, to some people, why wouldn't they want the choice?
Right.
So whenever I think about the 4% rule, I'm like, that's just really lazy.
Okay.
There's the easiest way I can phrase it.
Okay.
And this is exactly what most of the financial industry has done to us. They've made it lazy. They take these blanket statements and these buzzwords and these buzz clips like diversification. If you ask the average American what diversification means, they actually don't really truly know. They think, well, I've got 7 different funds. They're all by the same fund family, and they all have tremendous amounts of the same things in them. That's really not diversification. But when you think about producing income, I don't really care how you want to do it. There are thousands of ways to produce income.
Right.
Do you want to own a strip mall and to collect rents? Do you want a sublet a room in your home? Do you want to sell stuff on Etsy? Do you want an investment to provide it for you? Do you want to get it from the bank? So many different ways. But to me, the question is, what do you want your money to do for you? If you want to front load retirement while you're the youngest and the healthiest you're ever going to be, that's what I want you to do. I want you to enjoy that. You finally get to that point. I want you to retire a little earlier than you think you can, and I want you to live the way you want. That's front loading retirement. And you don't have to suffer off 4%. Because if you're a millionaire, congratulations, you get $40,000 a year from
Right.
that. That's
what is
miserable.
that?
You could potentially have 2 times that in this one example. Now, I have some people, we ratchet that up if they really don't think they're going to live to a ripe age of 90.
Okay.
But the question is, are you getting a tailored approach to your income needs? I'll guarantee you one thing. 4% is not tailored to anyone other than the person that made it a buzz clip in the front end. If you really want a tailored approach, go find a really skilled fiduciary advisor. Or better yet, just call our team. Find out what we have to say first. Even if we're not the right fit for you, that is not even the point. The point is, you know that you're going to get the type of stuff I talk about on the show every week. You're going to understand where you are, where you want to go, and what the opportunities are.
You can reach out to John and his team as soon as right now. Visit us at retirementsolutionshow.com to learn about how to have more opportunities than just a standard blanket rule applied to you and your income strategy and retirement. Let's get to work figuring that out. We also have links posted in the show notes. You can just click there, or again, it's retirementsolutionshow.com.
Thanks for listening to the Retirement Solution Podcast with Jon Hicks. Begin the conversation about your savings plan with John and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to John's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Incorporated is not licensed in all 50 states. To find out if J. Hagan Capital Incorporated Incorporated is licensed in your state, please call 502-690-5635. J. Hagan Capital Incorporated is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. By contacting us, you may be provided with information about insurance and annuity products offered through J. Hagan Capital, LLC, NPN number 1882794.